The RBI has notified one of the announcements it had made in the last monetary policy meeting. The banking regulator has cut the risk weightage on consumer loans from 125 to 100%. So how much will it help banks? Let's ask the Managing Director of State Bank of India, Mr. P.K. Gupta, is joining us on the phone line right now. Mr. Gupta, they'd announced this in the monetary policy. This has come into effect now. Is this going to substantially improve consumer lending?
I think what it does is, first of all, it improves the capital adequacy ratios of the bank actually. So since this applies on the existing book also actually, so depending upon how much retail book each bank has, I think the CAR will go up. My guess is somewhere between 15 to 20 basis points the CAR will go up. So which means that it overall improves the ability of the banks to be able to lend more. Definitely on the consumer lending side, on the existing products itself, I think there would be some room for the banks to be able to do something. But the fact that, this facility is available for the overall lending position of the banks, I think it's a good sign. As you said, RBI had already announced it and they have issued the circular. So the banks will definitely get benefit. Secondly, I think the festival season is already on. I think we will see some revival of demand happening. A lot of steps the government has taken, RBI has taken. We should see some revival of demand happening in the market.
That was going to be my next question, Mr. Gupta. Obviously, while this strengthens the ability of banks to lend out to the consumers, is there enough demand? Have you seen that trend over the last few months where consumer loans, as a segment is done well in terms of the demand pickup?
Yes, I think the personal unsecured loans, we continue to see good demand for this product. The stress on this portfolio has been very low. I think in some quarters, some concerns have been expressed whether, this portfolio is safe. I think there is no real issue as far as this portfolio is concerned. Some demand, we hope that, this should be able to generate not only on the consumer side, but overall demand itself, I think is what we are looking at actually.
Okay.
So
I would reckon that you do believe that this will have an uptick on the consumer loan distribution and of course costs for banks. Mr. Gupta, one follow-up, and that is on the other part that I read, which is that the limits of lending to a particular NBFC or a group have also been relaxed. Quick thoughts out here, sir?
Yeah, I think as far as SBI is concerned, we didn't have constraint on account of that. So they have increased it from 15% to 20%. But I think for some of the banks, it will definitely open up room for them to be able to lend to NBFC.
Right.
See, as you know, that the RBI has also allowed, for the banks to be able to lend more through NBFC, particularly this on-lending solution which the RBI has provided, where for the PSL, we can actually originate a book through the NBFCs also by means of on-lending by the NBFC. So I think this will open up room for a lot of banks. But as I said, for SBI particularly, I don't think we were constrained by this particular limit.
No, just wondering, sir, all of this plus the consumer lending, etc. I'm just trying to figure out if you believe that it will all help in boosting liquidity during a much needed period of credit for the Indian consumer and the corporate space. Do you think all of this leads to that?
I think liquidity has generally been good. I don't think liquidity has been a constraint. On the capital side, some banks could have been constrained, so that helps. And secondly, with the reduced risk weight, definitely, it becomes a little more attractive for the banks to do more consumer lending.